Hey everybody, Economic Ninja here. I hope you're doing well. This is going to be part two of what I need to do in actually a part three, a three-part series on these notes that I obtained from an Amazon meeting. And this is not for the lower level employees. This was for upper management, talking about the economy. If you have not seen part one, what I'll do is I'll put a link up here. Stop this one, pause it, go to part one, because I'm having to break these notes down, and it's very interesting what Amazon, the upper management, cares about. We talked yesterday about commercial real estate and all kinds of lending issues with the banks. They're watching this because they're watching their customer go away right now, and it's dwindling fast, and it's going to ramp up in these next two videos. The notes that they actually, what they're talking to their management about, explaining why they're closing down these fulfillment centers, why they are laying off employees and things like that. So what I want to do is, on this video, I'm going to start with, again, that February 9th note from the first video. Consumer slowdown online. The February 9th signaled that Amazon USA marketplace that the consumer audience has lost its appetite for things sold online. I honestly looked around. I can't find anything for February 9th that was significant, and I can't just go around asking people at Amazon. So, hey, if there's anybody that has an anonymous account here and works for Amazon upper management, let us know what happened on February 9th, because that is very, very interesting. All right. Um, and them talking about another 27,000 people to be laid off, scheduled to be laid off at the end of this month. My heart goes out to people that are losing their jobs, honestly. And that's what I've been trying to warn people about for 2 years, getting ready for this event, to start a side hustle, get some kind of other form, another job, a secondary line of income coming in, because you just don't know. And honestly, 2 years ago, I would never have expected AI to be exploding like it is right now. I knew it was coming, but to watch it happen, open up like Chat GPT from December to now and see how it's transformed, holy cow, it's crazy. All right, so let's dive in now, okay? So the first on these notes, here's a bit of information. China continues to have production and quality issues, and freight has dropped in price. But duration of time and logistic bottlenecks have pushed the just in time business models. Companies with space and access to capital overbought and are now dumping excess goods to non interested consumers nationwide. So, this is something that we spoke about over a year ago, where companies were panicked because they couldn't get stuff to sell. And we started to see, literally like aisles in Walmart go completely bare, right? And that Walmart and Target and all these massive stores, Costco, this is like real estate to them. They know per square foot how much they should be earning. So they only put products that they can sell, right? They put the best out there, because if they're not selling, they're not making money. Well, it's one thing to have products on the shelves that aren't selling because the consumer doesn't have an appetite to buy them. It's a whole nother thing to have literally empty spaces, which means you don't have anything to sell the customer, but also it puts your store in a bad light, sort of gives the customer a uneasy feeling of your management practices, things like that. And upper management understands this, and that's the last thing they want. So a year ago, we were showing you pictures of like Walmart's out at my local Walmart, where they had an entire two aisles of these cheap plastic uh, Coca-Cola bottle piggy banks. It was the most ludicrous thing I've ever seen. But I understood what management was thinking, and they had two full aisles full of these cheap plastic bottles. They must have been like a foot and a half tall a piece, right? We're talking literally well over 1,000 of these things. But they knew that they had to fill space. They had to show and give the presence of things to be full. And I don't know if many people know the story of the beginnings of Home Depot, but when they went with this model as the first of its kind to go with this hardware store that was a big box warehouse, they wanted to give the appearance that the reason why you were getting such good prices over your local Ace hardware store or other hardware stores in your area was because the store, Home Depot, the company, was buying in bulk. And so when they started their handful of stores, they actually went out to the manufacturers like the Milwaukee Tools and things like that. And they said, okay, we'll take like 100 tools and we'll take 400 extra boxes. And they're like, what are you talking about? Like, we need your cardboard boxes. We need to stuff all of the shelves. They did not have the money to fill these few warehouses that they started. but they had to give the idea that, oh man, there's tools in those. There wasn't. It was all facade. Okay. But what they wanted to do is give the customer that feeling of this is different. This is exciting. I'm buying in a warehouse. It's like I'm the supplier. I'm the store now. I'm going and buying these tools and I could go sell them. It's absolutely amazing, but it has to do with the psychology of the buyer, and Amazon understands this. All right, so China's having these issues. So they're literally companies that have bought all of this excess goods now are now finding themselves in real trouble because they have bloated inventories that they're being taxed on. Most people don't, a lot of people don't understand inventory tax also. You know, government set up our government set up this tax, this inventory tax, to where companies could not go and buy up all of one item and create a monopoly and run the price higher, right? So the companies get taxed on this. Well, they found themselves buying up all this excess goods. Now they're being taxed on it, and to double that pain, they can't sell it to the consumer because the mind shift has changed. And I can tell you from experience, back in last June, when I said, okay, that's it, we're at the top of the real estate market, you're going to see it now come down in price from here. It's because the mindset of the consumer just shifted, and it literally, I'm not joking, that effect happens overnight. It is crazy how fast it happens. So that's something that Amazon's watching. The next thing is return products sold online are over 12% in March of 2023, triggering Amazon to include return rate scores on high volume ASINS. This is crushing volume products. You know what? Let me do this real quick. ASINS. I had to look up a lot of these acronyms because I just don't follow it. So this is ASINS stands for Amazon Standard Identification Number. It is a 10-character alphanumeric unique identifier assigned by Amazon.com and its partners for product identification within the Amazon organization. So they were saying right here that uh, it was triggering Amazon to include return rate scores on high volume ASINS. This is crushing volume products. Very, very interesting. I got to be honest with you, as I'm reading these things, my mind is just spinning, contemplating or thinking about what in upper level management in Amazon is going through right now, trying to get these wrongs right. Crazy. All right. So now they also came in and said more sellers are opting for 3PL direct to customer shipping to dodge FBA fees. This has crushed the FBA model. So again, I had to get the definitions for you. So the first, more sellers are opting for 3PL. 3PL stands for, let me go to it. It is responsible for managing and coordinating transportation, warehousing, inventory control, order fulfillment, customer service, and other functions involved in moving goods from one point to another. So it says right here that people are opting for 3PL direct to customer shipping just to save these FBA fees. And FBA fees, FBA stands for, here we go, Fulfillment by Amazon. Yeah, just unbelievable what they're having to go through right now. It just shocks me, like in the first video, where they're really concerned about the banking crisis and real estate, because, again, this is something that I've been trying to pound into people's heads for years now. Real estate is the greatest wealth effect there is. And if you don't think that Amazon has spent literally tens of thousands, hundreds of thousands, if not millions of dollars into learning the psychology of the buyer, you don't know how these companies work. They have dove tons of money into it, and that's why they care about the real estate market and the banking crisis just as much as you do. Now let's see here. Um, one, two, three, four. Let's move on to the next video because I don't want to make it long. And so I'm going to put video 3 and I'll attach it up here. And when I come out with it, I think it'll come out the next day because of how I got to put these videos out. But I just want to close in saying this is incredible info. And if anybody ever has any insider info into companies and what's going on, what they're talking about, please send it to me, ninjabrohawk@gmail.com. I do not have time to go through. I get so many emails and I want to go through every email, but there's so many people asking for financial advice. I just can't give it. I'm not set up that way. I would definitely ask you to seek financial advice from a qualified person, but I can't do it. But if you have information that I could share with the nation, share with the world, with what's going on behind the back scenes, the scenes behind what everybody sees, it gives us a much better picture of what's going on in the economy. All right, guys, let's let you go and keep an eye out for video 3.